Welcome back to Explain the Charts, your ultimate guide to mastering market movements. Today, July 29th, 2025, we're embarking on an in-depth journey into Apple stock, symbol Apple, meticulously dissecting both the critical current news and its intricate chart patterns. As we open up the daily chart, displaying over a year's worth of data, we immediately notice AAPL's journey has been anything but flat, characterized by significant uptrends, sharp corrections, and periods of consolidation. This overarching view provides essential historical context, demonstrating the stock's price behavior and resilience under various market conditions over time. Notably, prior to recent turbulence, Apple had established fresh highs towards the end of 2024, pushing beyond the $240 mark and nearing $250, a strong bull run. However, this impressive rally was subsequently met by a significant downturn in early 2025, setting the stage for the current market sentiment, which we will analyze in great detail. Let's integrate the latest news headlines that are currently shaping Apple's investment narrative. Our recent market scan, including comprehensive Google searches and financial news summaries, reveals a distinctly mixed sentiment among leading analysts regarding AAPL's immediate and long-term prospects. This divergence in expert opinion effectively creates a powerful tug-of-war for the stock's price, contributing to its recent consolidation. On one hand, a robust cohort of bullish analysts continues to maintain buy ratings and optimistic price targets, predominantly citing Apple's accelerating services growth, which remains a consistently high-margin and rapidly expanding business segment. These analysts also heavily emphasize the highly anticipated integration of cutting-edge artificial intelligence features into its core ecosystem, envisioning these innovations as potent catalysts capable of reigniting robust demand for iPhone upgrades and fostering broader ecosystem engagement. However, a contrasting group of bearish voices expresses palpable concerns over the visible deceleration in iPhone sales growth, which has historically served as the foundational cornerstone of Apple's immense revenue streams. Furthermore, these bearish views are amplified by the intensifying competitive landscape, particularly within the absolutely vital Chinese market, where local players are gaining ground. Indeed, recent reports are confirming that Apple is facing significant headwinds in China, highlighted by the notable closure of its first retail store in Dalian and a continued struggle to regain substantial market share from formidable local competitors like Huawei. This ongoing struggle within such a massive consumer market clearly presents a substantial challenge to Apple's overall top-line revenue growth and global market dominance. Adding to the immediate short-term suspense, Apple is precisely poised to release its fiscal third-quarter earnings report on July 31st, just 2 days from now, making it the next pivotal fundamental test for the stock's direction. Analysts are generally forecasting an inline revenue performance with only modest year-over-year growth, yet underlying anxieties persist among investors regarding potential new tariff impacts and a broader weakening of global consumer demand, which could temper future guidance. Beyond the upcoming earnings, the progress of Apple's artificial intelligence strategy is under immense scrutiny. Some market observers are genuinely worried about the pace of its AI development relative to its major tech rivals, a factor that could potentially leave Apple lagging in this crucial growth area. Yet, despite these concerns, there remains a hopeful outlook for forthcoming AI features and strategic acquisitions, which could profoundly redefine Apple's future trajectory and attract fresh investor interest, leading to a re-rating of the stock. In a significant geographical pivot that could potentially partially offset China's challenges, Apple is showcasing remarkably strong growth in the burgeoning Indian market, where increased iPhone production has reportedly helped India surpass China as the top source of smartphones sold in the US, a very positive development. Recent product launches earlier this year, including a new iPhone SE 16e and updated iPads and MacBooks, further underscore Apple's unwavering commitment to continuous innovation and maintaining a diverse, robust product portfolio. Whispers and rumors of the highly anticipated iPhone 17 series, Apple Watch Series 11, And even a foldable iPhone later in 2025 hint at a potentially busy and exciting product pipeline that could ignite future growth cycles and attract consumers. As of July 28th, Apple closed its trading day at $214.05, representing a marginal 0.08% increase, while the current consensus analyst view remains a moderate buy, with an average target price hovering around $234.94, strongly suggesting an expected upside from current levels. Now, let's precisely correlate these compelling fundamental narratives with the chart's cold, hard technical realities. We'll narrow our focus on the daily chart to a very specific and impactful period, the dramatic price action witnessed in early April 2025. Here, you can clearly observe a sharp, significant decline, with Apple plummeting from over $220 down to the $170 to $180 range in just a few trading days, representing a substantial nearly 20% drop from its late 2024 highs. This precipitous drop, characterized by large red candles, perfectly aligns with the barrage of negative news concerning Apple being dethroned as the top smartphone vendor in China and facing escalated antitrust investigations in Spain, alongside the highly publicized closure of its Dalian retail store. This was a textbook instance where concentrated negative fundamental news triggered heavy, high-volume selling pressure, validating the market's profound sensitivity to these geopolitical and competitive headwinds, and causing a clear reversal of the preceding uptrend. However, just as swiftly, we witnessed a powerful V-shaped reversal and rebound from those extreme lows, demonstrating strong underlying demand. This aggressive buying, marked by significantly higher volume on the rebound days, suggests that substantial institutional money and value investors were prepared to step in, likely encouraged by the burgeoning growth story in India and renewed confidence in Apple's long-term AI strategy, as vocally highlighted by bullish analyst reports. This rapid recovery from the $170 to $180 zone unequivocally establishes it as a remarkably strong psychological and technical support level, indicating precisely where demand vastly outstripped supply and a key reversal point occurred. Following this extreme volatility witnessed in April, Apple has since embarked on a more sustained, yet somewhat subdued, recovery trajectory, gradually pushing its price back into the $200 to $215 range throughout May, June, and the current month of July. This post-April recovery phase demonstrates the market's ongoing reevaluation, where discerning investors are meticulously balancing the persistent concerns about China and potential tariffs against the increasingly promising narrative of services growth, India's significant expansion, and the truly disruptive potential of AI. The current price of $214.05 positions Apple right at a crucial technical crossroads, essentially testing a prior minor resistance level that absolutely needs to be overcome for further upward momentum and clear confirmation of a sustained uptrend. The overall trend from the April lows has consistently been upward, forming a series of higher lows, which is a classic bullish technical sign. However, trading volumes have generally been moderate, suggesting a degree of underlying caution among market participants. To gain an even more granular understanding of the stock's very recent behavior and immediate trading cues, let's transition to the 1-hour chart, meticulously focusing on the past couple of weeks in July 2025. The hourly candlesticks reveal a pattern of cautious accumulation, with price movements often characterized by smaller bodies and modest percentage changes, indicative of a significant wait-and-see approach by traders ahead of the critical earnings report. We can identify immediate short-term support around the $208 to $210 region, specifically. Price points like $209.32 on July 8th and $207.22 on July 9th show where buying interest consistently emerged to prevent any significant hourly breakdowns. This specific zone has consistently acted as a reliable floor on multiple occasions, effectively forming a robust mini-support cluster on the hourly chart, confirming its significance. Conversely, price action has encountered consistent resistance around the $213 to $215 mark, with repeated attempts to break higher often met with immediate selling pressure, validating the cautious sentiment expressed by some analysts. The hourly highs on July 10th at $213.48 and July 2nd at $213.34 clearly illustrate this ceiling effect, forming a short-term resistance barrier. The volume profile on this chart also distinctly indicates that spikes in trading activity frequently occur around these minor support and resistance tests, signifying active participation by astute short-term traders looking for tactical entry and exit points. For the sharpest detail and quick tactical decision-making, let's zoom in further to examine the 15-minute chart, pinpointing the very recent intraday movements from July 25th through July 28th. Here, the intricate patterns are even tighter, with the stock oscillating within an extremely narrow band, showing clear resilience above the $213 level, but also a persistent inability to firmly breach the $215 mark. On July 28th, the intraday low of $213.06 stands out as a critical immediate support level. A decisive break below this, especially on increased volume, could signal further immediate weakness, potentially bringing the $212 level into play, as seen on earlier July 24th lows. Conversely, the intraday high of $214.845 on July 28th marks immediate resistance, and a sustained move above this level, ideally accompanied by robust buying volume, would constitute a clear bullish indicator for the very short term, possibly hinting at a pre-earnings rally. The relatively muted transaction volume observed on these smaller timeframes, particularly when contrasted with the massive daily candles witnessed during the April crash and rebound, strongly reinforces the idea that significant market-moving action is being explicitly reserved for the highly anticipated upcoming earnings call. Traders are clearly positioning themselves for a potential volatility spike, and the subsequent direction of that spike will hinge heavily on Wednesday's announcement, demanding vigilance. This current tight consolidation pattern suggests a delicate balance between active buyers and sellers, all awaiting the next major catalyst to tip the scales. To effectively conclude our comprehensive analysis, let's once again revisit the daily chart for a holistic recap of Apple's current market position and its potential future outlook. The long-term support undeniably established around the $170 to $180 zone in April 2025 is paramount. A decisive breach of this critical level would signify a profound and concerning negative shift in market perception. Such a breakdown would likely be triggered by a substantial economic downturn or a severe, unforeseen company-specific crisis, thus making $170 to $180 a critical line in the sand for long-term investors and a major bearish signal. Conversely, on the upside, Apple faces immediate and stiff resistance at the $215 to $217 band, where it has recently struggled to consolidate gains. Successfully breaking and holding above this, ideally with consistently increased trading volume, would strongly open the path towards the $225 to $230 zone. This $225 to $230 range represents a key area of previous consolidation from late 2024 and a more significant historical resistance cluster that needs to be overcome for a sustained rally. Beyond $230, the path clears somewhat for a potential run towards the consensus analyst target of $233 to $235. To achieve this and ultimately challenge the formidable December 2024 peaks near $250, Apple would require truly transformative and exceptionally positive news. This would most likely be related to groundbreaking AI adoption that drives massive consumer excitement or a significant and unexpected improvement in its challenging China market standing, perhaps even a favorable resolution to ongoing trade tensions. From a bullish perspective, the stock is currently strongly supported by its robust and consistently growing services revenue, which offers predictable income streams. The high anticipation for upcoming AI features that could drive a new multi-year upgrade cycle, and the undeniable growth momentum in emerging markets like India. The likelihood of Apple reaching the $230 to $235 target in the short to medium term stands at a moderate 55 to 60%, highly contingent upon the July 31st earnings report delivering a significant upside surprise, particularly in services or AI guidance, coupled with a more optimistic commentary on global demand. Conversely, on the bearish side, persistent concerns around slowing iPhone sales, fierce competition from rivals such as Huawei, and the potential imposition of economically damaging Section 232 tariffs by the Trump administration remain very significant risks that could weigh heavily on the stock price. The probability of Apple retesting the psychological $200 level, or even revisiting the April 2025 lows near $180, is also moderate, at around 40 to 45%. If the earnings report falls significantly short of expectations, or if geopolitical trade tensions intensify further and directly impact Apple's core business. Looking ahead, crucial indicators to continuously monitor include post-earnings analyst revisions, any concrete announcements regarding Apple Intelligence's widespread rollout and its initial market performance, and any noticeable shifts in regional market share data, especially from China and India, as these will directly impact future revenue projections. The upcoming earnings report on July 31st is undeniably the most pivotal near-term catalyst for Apple, as its content will largely dictate the stock's immediate trajectory for the coming weeks and potentially months. Be prepared for heightened volatility around this announcement, and always prioritize your robust risk management strategies by setting clear entry and exit points based on your analysis. Thank you for tuning in to Explain the Charts. We sincerely hope this deep dive into Apple helps you navigate the markets with greater confidence and make informed trading decisions. Don't forget to like, share, and subscribe for more comprehensive and timely market analyses.